now had a word with Manish Gunwani to get in his outlook on alpha opportunities in the markets, what his views are on the liquidity situation, tech stocks overseas, as well as what he's looking at as the next big trend. Well, he had a lot to say, but let's first put it into perspective by telling you a little bit more about Nippon India Mutual Fund. The top sectors include financials at 25.9% stake in the portfolio. You've got materials at 12.9%, industrials, healthcare and utilities that make up the major components of the portfolio. The top stocks include financials like HDFC Bank about 4.9%, there's ICICI Bank at 4.9% as well, 4.4% thereabouts, SBI, Infosys 3.3% and NTPC at about 3.1%. The recent buys in the Nippon India Mutual Fund include HDFC Bank, HDFC, Vedanta as well as HUL and Z Entertainment, while the recent sells include ICICI Bank, SBI, Sun Pharma, Axis Bank and NTPC. Now they have the Nippon small cap has given a return of about 105% in the last 1 year. We've also seen the Nippon multi-cap fund giving a return of about 67%, with the growth fund with a return of 73%. Well, Manish Gunwani is of the view that when it comes to the large backdrop of macros, the inflation expectations in the United States have started falling. In fact, he believes that a sectoral rotation from commodities is being seen to cyclicals to FAANG stocks. Coming to the earnings back home and looking at India, he doesn't believe that the April to June earnings are going to matter that much when it comes to the corporate standpoint and the overall outlook for India Inc. He believes that these globally linked sectors like IT, they should have done well in Q1. But going forward, he expects that we will see a sense of pent-up demand picking up, and that's largely going to power the revival for the Indian economy for earnings, as we do see the vaccination drive picking up momentum and cases as well lowering. He expects that global bellwether stocks like Caterpillar have corrected, and he also goes on to say that India is coming out of a long down cycle within the cyclical space. Manish Gunwani is of the view that high fiscal spending and pent-up demand along with lower rates will aid recovery, and it's hard to see why India cannot grow at a rapid pace over the next 18 months. The theme of preferring value buys in financials to yields, according to him, is rewarding, and he believes that there's a bigger role for technology determining the profit pools in financials. He tends to remain cautious on NBFCs as well as smaller private players, and believes that as of now, the growth estimates in cyclicals are very aggressive. And he goes on to say that the big new trend is ESG. It's too strong a trend to be dismissed as a fad.